The Desert portfolio comes from a member of the Gyroscopic Investing forum. Here we'll take a look at its components, performance, and the best ETFs to use in its implementation. Not far off from the permanent portfolio, the Desert portfolio is a 3-asset portfolio comprised of stocks, treasury bonds, and gold. Its 60% intermediate bond holding is functionally similar to the permanent portfolio's barbell bond approach. The Desert portfolio looks like this: 30% total US stock market, 60% intermediate term bonds, and 10% gold. Compared to the permanent portfolio, I like the Desert portfolio a little more due to its slightly higher equities allocation and lower gold allocation. Here I've compared the historical performance of the Desert portfolio to the permanent portfolio and the S&P 500 from 1978 through 2021. As we'd probably expect, the Desert portfolio achieved a slightly higher general return, but a pretty significant higher risk-adjusted return than the permanent portfolio. The Desert portfolio's volatility was less than half that of the S&P 500, and its max drawdown was nearly 1/5. Of course, keep in mind that bonds performed extremely well over precisely this backtested time period of about 40 years. At current yields, we would not expect the same returns from bonds going forward, so the future may look very different than what you see here. Incidentally, the Desert portfolio is very nearly a risk parity weighting, with each asset contributing roughly the same volatility to the total portfolio. You should be able to construct the Desert portfolio with popular ETFs at any major broker. I think M1 Finance is a great choice because it makes regular rebalancing seamless and easy, has 0 transaction fees, and incorporates dynamic rebalancing for new deposits. I wrote a comprehensive review of the platform that I'll provide a link to in the description. Utilizing mostly low-cost Vanguard funds, we can construct the Desert portfolio like this: VTI at 30%, VGIT at 60%, and IAUM at 10%. If you want to get some international diversification, and I would, we can simply replace Vanguard's VTI with VT, their total world stock market fund, resulting in VT at 30%, VGIT again at 60%, and IAUM at 10%. I'll provide links for both of these portfolios in the description for viewers who happen to use M1 Finance. What do you think of the Desert portfolio? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.